Welcome back, traders and investors. We are still here. It's 9:32, and I've been able to get Sean Udall on the line. He is the tech stock strategist. He has a lot of good insights into the market. Sean, how you doing this morning?
I'm doing good. I'm doing good. It's been a brilliant December.
Yeah, it's been what volatility last week, the bounce back and the rebound here. But first, let's just start out. We'll just go with the big boys, and we'll get your appraisal one by one here. Let's just start with Apple Computer here,
Sure.
and what I know you've been bullish on this for a while, but we seem to be running into some problems here at the 112 level here. Actually, yeah, look at the last four highs. You got a couple in the 112 high 112 area and a couple in the 113.50s. Just think you might be seeing a little bit of profit taking your end in Apple.
That's what I think. The stock, it made a just an absolutely vicious run to the high one teens, right? That 120 level. So, the whole point, I've loved the stock. I've been in the stock. I'm 90% plus and counting on the common. And, I think this thing has more juice. I've published the price target. Actually moved it up finally. I'd been at 145 for, I don't know. I think I was at 145 18 months ago. I finally moved it up to kind of 155, 165-ish. The analysts are still playing catch up on the name. Technically, it's a little tired, but I think it has more juice. I think they're going to have a spectacular first quarter. I don't think the guide's that bad. And what I said before was, I think everybody's going to misinterpret the upgrade cycle because the large screen iPhone is not going to have just a 2-quarter upgrade cycle like all the prior iPhones did. And I think the analysts aren't really they have yet to embrace that idea. So we'll see what happens, but I think you're actually going to see iOS take a lot of market share back from Android that over a 2-3 year.
Okay, tell us what goes into that price target. I know you like to crunch numbers and stuff. Could you just
Sure.
quickly, go in and tell us what goes into your calculations?
Yeah, I don't do this in every single tech stock I follow because I follow hundreds of them. But on a lot of the key ones, I go ahead and I do my own earnings model. So I basically forecast, all the product sales for Apple, and I have my iPhone estimates and my iPad estimates and stuff like that. The other thing I do too that's a little different, I guess I kind of go back and look at things the other way. I'll take and I'll look at kind of where the analysts are and look at some historic numbers and kind of see, okay, what conditions led to when analysts either overshot or undershot the estimates. So, for example, I turned bearish in Apple in 2012, and I just couldn't get to the numbers that most other people could get to on future iPhone sales beyond a certain point. Because I was like, look, they don't have a large screen iPhone, Android leading share, blah, blah, blah. So I kind of do both. I try to forecast the product sales numbers, but then I do even a kind of a higher level check and just say, do these numbers make sense? Are they real? Do they look sustainable? Things like that. And so, I guess I kind of bifurcate it from two directions, but yeah, that's basically. But I go down all the way to my iPhone estimates and my iPad estimates and Mac sales and stuff like that with Apple.
Okay, let's talk about one that me and you have been going back and forth on what we know for quite a while here on Twitter. And boy, oh boy, it's trying to rally a couple times. There was news out last week. I believe it was Bob Peck was talking about Costello won't be there in a year. What's your take on that, and what is it going to take to get Twitter moving north?
Yeah, so if you're a pure momentum trader, you probably haven't liked it because the stock hasn't really moved in a traditional momentum fashion, and even when it did so rapidly that it was sort of hard to play. So I'm more of a reversal trader from my technical style. So for reversal traders, the stock's actually a pretty darn good trading stock. But as far as what's going to happen, my view is I don't think it matters if Costello stays or goes. I think the platform's strong enough, the platform's rich enough. Again, I think the way I told you before, my only real concern with Twitter is that if they try to change things too much because they get overly concerned about the action in the stock price. But I don't think they're going to. I think they're just going to do incremental ads along the platform, incremental additions to what's already a really, really good product. And just, we reach these points of just pure stupidity, right? I mean, if you look at Twitter, if you try to find any other company that is growing at the rate they are, but with any company their size, it just doesn't exist. There's no other company growing 100% revenues that's $1 billion, $2 billion company. Well, then, by the way, if you go down to $600 to $700 million companies, well, guess what? You can't find any of those either. You'd have to probably go down to companies that are $20 million, $30 million, $40 million companies to find 100% growers. So I did a very interesting analysis the other day, and I said, what if Twitter was a biotech stock? Okay, i.e., even after the drop of Regeneron and Gilead and some of these stocks. Okay, let's just value Twitter like Regeneron. Well, guess what? Twitter would right now be $120 stock. Now that's on EV to sales or you got to go to an out year sales number, like price to sales growth ratios and things. But this is not that complicated. I mean, it's not like you got to be a rocket scientist to do this kind of valuation work. But that's it. I mean, if Twitter was valued at Regeneron's valuation right now, it'd be $120 stock. So, we'll see what happens. Facebook was hated too. Apple was hated. Google was hated. In 2010, Qualcomm was hated. And those are all home run stocks. So as long as Twitter doesn't do anything too drastic and completely change the product and make it worse, I think they'll be fine. So, we'll see what happens. They have to deliver, but this whole, MAU growth and Dick Costello thing is just, it's reached the point of absurdity. So I wouldn't be surprised if that's one of the stocks of the year in 2015, by the way.
Oh, good point there. Yeah, probably a little bit of year-end tax selling too here because you had that ridiculous run up of, I believe, over
absolutely.
$75. People are like, oh, the hell. I mean, to me, I know we talked about this, when it was just under 39, and so you're still sticking with it. That's your long-term blood in you that you gotta teach me. We got a question coming out of the chat here, and
Sure.
You talked about RNG, and it's had a nice move since your last. Tell us a little bit about that stock and how you're playing it.
Okay, so RNG, not to be confused with Regeneron. RNG is like Central. Yeah, I mean, so I put together a January list every year. So this was kind of one of my key January list stocks, and so it's a beaten down stock. By the way, so Ring Central has never missed a quarter. They've never missed an earnings report. At one point, the stock was a $24 stock. Sort of became an IPO orphan, right? And it was down almost $10. And I think it might have been $10.50 when I featured it on one of these radio programs. But yeah, I mean the stock's at $14.65. Yeah, I value this one. This one, I've taken some off. I've taken about half to 2/3 of my position off. This one now, I kind of want to buy on dips or on momentum breakouts or extensions. I mean, so now I've kind of turned into a little bit of a traditional technical trader on it. I do think it can continue to work into next year. I value the stock to about $18 to $20 without much difficulty. I mean, it could go quite a bit higher. This is also a name that could get bought out. Tons of people could buy Ring Central out because they have really good technology and a huge customer base.
How come you don't hear about this stock? How come you don't hear about? How come you don't hear about it? You hear about your AT&Ts and your Verizons and stuff. Why don't in the Comcast why don't you hear about this stock?
Well, I mean, it is $1 billion company. I mean, that's so that seems like it should be bigger. I remember when I first started in this business 15 plus years ago, $1 billion company was sort of in the middle of, or in the upper end of small caps to kind of the mid end and mid caps. And now I think $1 billion stock it's almost kind of treated like a micro cap. So I think $1 billion just isn't what it used to be. One, so I think $1 billion companies and below don't get the attention they used to be. I think the other thing is, when stocks kind of become hated and become cheap and get into the land of what I call succulent entry points, right? Like where you have really good results being met with really low stock prices. There's just not that many people that hunt these things out anymore. You know, another one, not to diverge, but Verona Systems. I'm almost positive we talked about this stock. So,
What's
I
a
mean,
symbol?
literally 4 to 5 weeks ago, Veronis was a $20 stock, and today it's 32. And this is one. I mean, I love Veronis. I mean, Veronis is a miniature Splunk, which is another name I really like. So, but here's a great example. Veronis was an IPO, went to $60. Everybody hated it and thought it was a bad company because it went to, 18.25. But same thing. They have never missed a quarter.
Wow.
And all of a sudden, at the end of tax loss selling. By the way, this might have been my favorite January tech stock, Veronis. And I didn't think it was going to move this much. I mean, I thought, hey, it's going to go back to 26, 28, no problem. I was actually selling some at 30. I bought it at about 20 to 22. It's 32.50 a day, and it looks like it's going to, go. Heck, I don't know. I mean, this thing could go back and test the old highs.
Wow.
So that's what. So once a stock goes from hated to loved again, who knows how high it's going to go. But yeah, I mean, it's hard to say why these stocks get ignored or kind of forgotten until something happens. I mean, generally that's the thing. Until there's a significant catalyst, there's just too many names that the machines and the algos are moving around and the traders are trading. So until something happens to put a name back on the radar again, it can kind of stay forgotten for a while.
Do you have time to cover two more stocks for us? I know we got
fire away.
Yeah, we got started a little bit late, but you got a fan here in Rob Hood, and now he's asking for any updates on IMPV, Imperva.
Yeah, I mean, that was another one. That stock worked really, really well. I like that. Unfortunately, I'm not in that. Here again, this stock, all-time high 67. This is basically like Veronis. Imperva did miss a quarter though, but they haven't missed one lately. So I don't know. I'm actually out of this. I played this both in common and options before the last earnings report. I literally just nailed it. I mean, in fact, the last 2 quarters I was in the stock before the earnings. So at 52.70, I do think it's a little bit in the no man's land. At the same time, the security stocks are super hot. I would be surprised if this thing keeps going higher. It's not super expensive on a valuation basis. Market cap's about $1.4 billion. This is one of my stocks that I still think can easily be bought out. In fact, I think I wrote a piece about 6 months ago that said that I thought Microsoft should buy them out. So it could go higher. It's not super expensive. It's gotten pretty expensive again, but it's not nosebleed. I do like other security names better, like FireEye. But I think Imperva is a great name, and I was on it. I was on this stock from, 25 to $30, maybe even a little lower, all the way. I think I got out of it at about 43 to 45-ish. Mm-hmm. So I've missed the last few points, but I pretty much made my money, and my options only had a week or two left for expiration. So I guess I should have rolled them out, but I basically took a pretty substantial gain in that name. And so now we'll see what happens. I mean, if it pulls back hard, I'll be in it. And I'll evaluate it hard before they report the next quarter.
Okay. What about, do you follow Sabre Corporation at all, SABR?
I don't. I used to know that name, but I haven't done anything with it for a long time. But, yeah, don't do that one now.
Okay, so we're gonna one more for you, and this is just, we're probably not gonna have you on again until after the first of the year.
Sure.
What's the one? And I know we talk about Twitter a lot, but what's gonna be the one stock that you're gonna really be keeping an eye on for upside potential in 2015?
Boy, hard for me to go one.
Go a couple. Go a couple.
I'll make this a 2 or a 3 bagger. I'm gonna say FireEye, Twitter. I still think Splunk has a ton of upside room. And then I'm actually watching a new IPO. I'm going to throw that in there, a newer. It's called New Relic. This does not meet my valuation criteria right now, but if this thing were to pull back, and there's always IPO lockups, and there's always some negative news stories and things like that. So basically the theme here is that all these stocks play in the same thing. It's either big data analytics, or security, right? So Twitter, FireEye, newer Splunk, they all work in the, some are more security, some are more big data, some are a company that's like Twitter where people are putting the information out that they're going and grabbing the data from. But I think that the last year to 18 months has really highlighted what's happening and all that in that world, and I think we're gonna. I mean, we could get kind of stupid on this stuff.
Okay.
So we'll see what happens. My 1998 thesis is fully in play. In fact, so much so that David Tepper came out a few days ago and basically uttered what I've been talking about with my 1998 thesis. He almost sort of uttered the thing kind of word for word. I don't think David Tepper is a subscriber of mine, but I like to know that he's basically looking at certain characteristics of the market, thinking things could play out in a similar manner as I do.
Yeah, in good company there. Sean Udall, of the Tech Stock Strategist, has given us some excellent calls on this show and follows up his analysis very, very well. Sean, thanks for coming on, and appreciate you, sticking around a little bit longer here. And we'll talk to you again after the new year.
Happy New Year, everybody.